estate disturbing the status quo. And our panelists are Sandro Salsano, from the president of Salsano Group Panama, and Mark Anderson, president of MGAC USA. So Sandro, can you introduce yourself, please?
Hi, Mohammad, and hi, Mark. To be with you. So we are a single family office with a presence, a strong presence in Latin America. I'm the president of Salsano Group. We are a private conglomerate investing in real estate, private equity and technology globally, but with a bias towards Latin America. And very happy to be with you.
Mark, can you tell us more about you, starting from the story that when you were 11 years old, watching the metro in DC?
That'll be it. We don't have enough time. But good evening or good day, everyone, and thank you for having me on the panel. I am Mark Anderson. I operate MGAC. We're a consultancy working globally with ultra high net worth families and family offices, really to mitigate risk and deliver the real estate investments and personal projects wherever and whatever they might be. We employ about 170 professionals and have worked across 6 continents. We're still missing Antarctica, so there's still time to go. So in brief, that's me.
Thank you, Mark. Sandro, let's start with you. Real estate now is a big topic with the pandemic, people moving from working at home to from working from the office to home. The commercial real estate is going down. So what's your view on that as an investor?
We have a diversified portfolio in real estate. Obviously, some sectors they've been doing pretty well even during the pandemic. You can think of logistics, of agri-logistics, which is our strength. We own the largest free trade zone in Central Latin America, for example. But others obviously they've been suffering, and I think nobody really knows what's going to happen. For example, commercial shopping malls. Obviously, some companies they want to go back to work. You have the Goldman Sachs type. In some sectors they need really to be in a room. So in some activities you need to be in a room. But I think we will have a combination of on the office side, for example, or some companies will give an options. We give an options to our employees and our team, and I think that people they still enjoy working partially from home and partially they need to get out to avoid any divorce and going crazy home, so they need to go and see their colleagues in the office. So I think that you will have a combination. I think it's $1 million question. The assets definitely became more illiquid. So real estate is already an illiquid asset class, and usually the cycle is 5-10 years. I think in some cases it became even more illiquid. So obviously you'll have less buyers because simply people can't travel. Companies, they're reducing their, we do lots of Zooms, but it's difficult to make an acquisition when you don't visit the site. So I presume that it's going to take some time before things will recover. And I guess everybody's just waiting to see, once we all get vaccinated, what's going to happen.
Mark, what's your view on that?
The real estate of tomorrow?
The real estate of tomorrow, what does the future hold for commercial investment?
Wow, that is the multi-trillion-pound question in a COVID-changing world, isn't it? I mean, truly. I mean, hotels, commercial, retail, and office, as Sandro said, have been greatly affected in terms of values. Retail's problems may be an acceleration of trends that were already underway toward online purchasing, but the world has really made a jump in how we live and how we work over the last year. I don't believe that any of our clients truly know what tomorrow holds, but I think we can all agree that really change and risk are associated with it. And actually in this environment, some of our assets have outperformed even during lockdown. For instance, we helped develop a 5-star resort property for an ultra high net worth client, which has actually outperformed during COVID, as people seem to try to escape their home office and infinite Zoom calls. Their ADR is nearly double the pre-COVID rates, and the property is sold out 6 months into the future. So I think that's a long answer to a short question. I think change is what we're experiencing, and in change comes opportunity. So the opportunities will be found.
So you think the COVID is like a turning point in our life, that people will not come back to the normal or what we used before the COVID when it comes to their habits?
I don't think business will conduct itself over Zoom indefinitely or completely. So I think there is value in face-to-face. And that will come back. To what extent? You know, you read Mr. Gates predicting that business travel will be off by some significant percentage. I'll get the percentage wrong, but 40 or 60% of business travel won't come back. I think that's quite possible, but that's still 50% business travel coming back, which still means that hotels, airlines, and companies that really rely on business travel will continue to exist. So will life be different? Of course. Do I think we're all going to be sitting at home or in our home office on Zoom all day? I really, really hope not.
Sandro, what do you think about that? Do you think that we'll get back to what the life before COVID, or it will be a turning point in our life, the new normal?
I agree with Mark. There will be a combination. Obviously, I've been working actually from an island for most of the pandemic. We're still on an island now. You can see the wind blowing, but I think that for us, and for our employees, obviously we travel and do due diligence. It's been difficult to travel, and I think that everybody's expecting a probably 50% reduction in business travels. I like Zoom. We do 20 calls a day on Zoom, but I think that I miss the personal contact with people. And so I think that we will have probably a combination, and definitely will be a new there'll be a new paradigm. I think that I don't see, for example, that we will go back 100% to offices. I think that you will still have the opportunity to work a couple of days from home. At least from a survey we did with our employees, it was I think 60% that they were happy to work from home. So I think that we will have a combination. Obviously, will suffer because you assume 20% of vacancy. Obviously, it can be a big number, and as you know, most of those buildings, they have mortgage, they have interest that they need to pay. So some developers will be in trouble. We are lucky because we're not very exposed there, and I never really like that subsector of real estate. We have always been more in logistics and agri-logistics. So actually, we've been doing pretty well even last year. But yeah, there will be definitely there is an overcapacity, I think, on the commercial space and on the retail. We just don't need. If I look at US or LATAM or some of the markets we are involved, you don't need too many shops. You don't need all those offices. Then e-commerce obviously has been. You look at Amazon, you look at Mercado Libre in Latin America, for example. They've been really doing extremely well, and so you need a warehouse rather than a retail shop. And you need perhaps Zoom or you can meet in a coffee shop instead of having an office. I've been inviting people in my house on the island. So I was talking to Richard Branson recently. He told me that I've been copying him, and I told him that it's actually a great business model. People, they come, they enjoy the beauty of the ocean, and we have board meetings by the sea, and I think that everybody is much happier and smiling rather than sitting in a conference room.
So your island is on the Pacific side or on the Caribbean?
We are on the Pacific. We are on the Pacific side.
So
when you come to visit us, we love to host you as well.
Thank you, Sandro. And Mark, when it comes to commercial real estate, do you think people now or investors will repurpose the property from like commercial to logistics or medical office building? What's your view on that? Since you are in that sector in the US.
I think there's certainly very active conversation. Multifamily has been a big sector here. Build to own and build to rent have both been very robust sectors here in the United States over the last really decade. I think that trend will continue. We're seeing conversations about repurposing hotels into multifamily properties. Similarly, we worked with a ultra high net worth client who had a very large retail asset that had gone vacant, and they repurposed it into, well, at the time, a co-working, actually a mixed-use co-working space with residential. So, you know, if the real estate investment world's uncertain, I think that the need for appreciating income-producing assets is not uncertain. And the question really is, what will those assets be? And the world's filled with very creative, very smart people figuring out what to do with all that real estate to continue having it appreciate and continue producing income. So I'm actually bullish.
So Mark, when do you think the picture will become clear for the real estate investors? Where to put money, where to liquidate, to repurpose their portfolio? Like in 1 year's time?
I think the future of any real estate investment becomes clear the day you sell it and get out and convert to cash. Up until that moment, there's risk and uncertainty. So that's a flippant answer, and I apologize. But you know, I think all of this is an evolution. We don't know where it's going to end. We do know that there's a need for, as I said, appreciating income-producing assets. There's an awful lot of money tied up in commercial real estate and real estate investments. And all those smart people are going to figure out ways of preserving asset values and enhancing them through either appreciation or income. So when's it going to be clear? I think it's going to be an evolution, not a bright shining moment when we suddenly see what the future holds. A journey, not a destination.
Yeah. Sandro, since like you are investors and you have a real estate portfolio, with the current pandemic, are you repurposing like your real estate within your portfolio or not?
I know it's I hear that word, the verb a lot, you know, trying to repurpose. I think it's just very difficult, you know. If you own a commercial building, you know, you can try to do what we try to do, but it really, you know, believing you're become a tech then business. But I think it's very, very difficult. In some cases, I think that you probably need to write it off, and you know, as we've been very successful, but obviously we also have our failures, and you know, and I can talk for hours about that. All the failures we had, you know, in different sectors of real estate. Obviously, things don't necessarily as you wish, and then you end up that you know, you can't really sell for, you know, 5-10 years. You had the buyer, then, you know, definitely last year it was very difficult. Nobody could travel, so we couldn't find any buyers for some assets. I would say the small deals didn't do very well. Funny enough, the larger the deals, the more I think the more we saw a success rate, especially with, you know, sovereign funds or more big institutional investors. And on the repurpose, I would say it doesn't work. Obviously, we tried, but, you know, we haven't been successful. I think that, you know, we just had to accept that, you know, things have changed and there is an overcapacity in some sectors. You can't sell offices. You can't sell perhaps luxury real estate. And so, you know, we are lucky that we are diversified, that actually we are very bias towards in logistic parks, agri-logistics. So obviously that component has been doing very well, and so overall the portfolio is doing actually very well. But yeah, it's just very difficult. I think that I wish I would have an answer for that, but I don't.
Okay, with the current situation, do you think there is any opportunity in real estate sector to buy? Sandro?
Yes. I think that we are buying more in logistics. We are actually we own the largest agri zone in Central Latin America. We are buying more. We're trying to consolidate the region in Mexico, in Peru, in Guatemala as well. So I think that there are opportunities. US, I think there is way too much liquidity. So for us, we've been exiting some positions. You see there are trillions of dollars, plus now each family got cash. So there is way too much liquidity there, and for us it's very competitive. And we are known for value investments. So even on real estate, not really a game for us where you have 4 or 5 players, outbidding each other. It just doesn't work for us. But in Latin America, I see good opportunities also because it's a market where not everybody has an expertise. So I would say in the sector, logistic and the agri-logistic, we are investing heavily in logistic parks, and we agri-logistic some. Hello?
The logistics not overpriced currently. You don't think it's overpriced?
No, not in Latin America. In US probably, because as I was mentioning, you have too much cash and too much. But in Latin America, we are seeing good transactions. We are buying more. Especially, we focus on sector that has a very high entry barriers. For example, it took us 5 years to get the license from the president of the country and 50 ministers to get the free trade zone. So obviously, even with Amazon, obviously they will. It's difficult to enter a market. It's not just about cash. You need to have, you need to do environmental studies. You need to convince several ministers. We are creating 1,200 jobs, and also we are the component of the tech sector. We partner with Aerofarms, for example, is a leading vertical farming company. They're doing a very large plant in Abu Dhabi, and also they started Newark. So you can have 5% of water, so you save 95% of water. You have no pesticides. They sell to all food. So we are actually bringing in the region where we have an expertise like Latin America, some new technologies in the parks we own and we operate. So I think that there is a good opportunity for that in the agri sector, in the logistics sector. And US, you have to be careful, I would say, because of the liquidity. Same Europe, but selectively we see good transactions, a good opportunity.
Thank you, Sandro. Mark.
Same question.
Yes. Real estate, safe haven in turbulence world, or just an illiquid asset in a world searching for value and yield? What's your comment on that?
The answer is yes. There's, I completely agree with Sandro's comment about the United States being a frothy market. There is an awful lot of liquidity looking for a home. I think really that's been the case since the global financial crisis in 2008. Really, I call it a relentless search for yield. With ultra low interest rates, really almost globally, finding income producing or greatly appreciating assets has been very, very difficult because frankly, cap rates have been driven very, very low. We're involved right now in a transaction for a high net worth family that's trading at a 4 to 5% cap rate, which is it's crazy to me. Perhaps gone are the days of double-digit expectations for real estate risk projects. We're now in the low single digits like everything else. So safe haven or a liquid asset, the question is, what are the alternatives? And if it's not real estate, and real estate historically has performed extraordinarily well, where else are you going to put it? And so, as I say, the world is awash in cash looking for a home, if that's fair.
So the number of transactions happening now in the US, which is where you're based, does it meet your expectation or lower or higher than you expected?
I'm sorry, a little bit.
The number of transaction or the value of a transaction last year and like during this few weeks from this year, does it meet your expectation or it's lower than you expected? Or
Prices are higher than expected, frankly. Because in terms of deal volume, I think deal volume has been slow just as the world kind of reacted to things and figured things out. But by the summer, I think it started picking up. But prices, I think, are extraordinarily frothy and really almost overstated, as Sandro said. There are opportunities, but the problem is, as he said, there are multiple people looking at those opportunities, driving up prices and making them less attractive.
Good. Sandro, can ESG be a value creator for real estate in 2021? Can ESG be a value creator for real estate in 2021? Silent. You are on mute, sorry.
Yes. Within ESG, we signed with the United Nations. I've been lucky to be part of the World Economic Forum for last 7 years, and obviously it's my commitment to gender equality and to also to have more ESG programs. For example, we signed recently with the Tent, it's an organization which is promoting the refugees. As you know, especially in Latin America, there are lots of refugees, mostly from Venezuela. So we are pretty active with that, and also I think on the companies we bring in the region, we represent, where we own, we are shareholders. I mentioned Aerofarms. Those are companies that are actually they won several awards in terms of doing good. We think that you can invest and not necessarily harm the planet. So we are climate change is obviously one of the things, one of the item we have on our agenda. I recently joined Richard Branson and other entrepreneurs signing a petition of business people against the capital punishment and the death row. So I think that you have a responsibility as a business person to also to push ESG in real estate, especially. So you can do great things in real estate, also respecting the environment. So we are lucky to work with the municipal environment, for example, in different countries, and respect that. I think it's important to have also young entrepreneurs to think their way.
Mark, to close this panel, do you have anything, a few words, just to summarize our discussion?
I was going to just pick up on Sandro's comment briefly on ESG. I think we're certainly seeing a movement in the United States toward, I don't know if B corporations are a global phenomenon yet, but a movement toward B Corp certifications here in the United States, which is really driving an ESG process. Along with that's conscious capitalism and work by John Mackey and those involved in Amazon, working toward conscious capitalism. The most environmental building project ever is the one never built. So it kind of feeds back to repurposing of real estate for other purposes. I think as the world thinks about carbon footprint and really those sorts of issues, really thinking about repurposing existing real estate assets as opposed to demolishing and building new is part and parcel of ESG and really the commercial real estate industry. And it's frankly, again, both a challenge and an opportunity. Lastly, I think, thin margins on investments right now are driven by high prices. And it actually makes the execution of those projects within their economic parameters all the more critical. It frankly raises the risk profile of underlying real estate assets when prices get high and margins get low. So mitigating risk and delivering projects within their economics really defines our organization and what we do. But with that, I'll be quiet.
Sandro, anything to close the session with as a takeaway for our audience?
Well, I think that, you know, real estate will continue perform well. Again, I don't have any advice for anybody. You know, we make mistakes all the time, and hopefully we learn from them. But I'm a believer in the sector. I think that logistics should perform well. I'll be careful with you know, the when you bid, especially with all the liquidity in US in commercial, residential. I see even cities like Miami, you know, they're booming, all this tech boom, all this, you have luxury real estate booming. I think you have to be careful. You always have cycles. So, you know, I think you need lots of patience. You need an MBA in patience because, you know, as I said, there is more now illiquidity. So, you know, assets you thought you could sell in 5 years, perhaps now it's going to take 10 years or more. So obviously, it's going to impact your IRR, and we see it on some of our co-investments. So not everything is unfortunately doing great, but you know, I think that if you have patience and you have a good asset and you have no debt, which is what we do, you know, we can afford to stay in and waiting for the cycle to restart and the economy to reactivate. So I think you need to. My only advice would be to be patient and to stay confident that if you bought a good asset, you should be able to exit at some point, and hopefully with a positive result.
So you believe that the real estate gets sick but never die?
Yes, as you guys say, as many friends say in Middle East, you get sick but you never die, but you can die. Unfortunately, we all die at the end of the day. So, but you know, we get vaccinated, so you know, we are resilient. We are resilient.
Let's see. Thank you, Sandro. Thank you, Marco.
Thank you so much, Mohammad. Thank you, Mark. I appreciate it. Thank you so much for the conversation.